What sets Tesla apart from the competition with their ambitious intentions to reach 2 million deliveries by 2023 and dominate the mass market? How are they able to maintain their operations? How may the answers to these questions influence your financial decisions? First and foremost, if you haven't subscribed to our channel yet, now is the perfect time to do so. At the end of the video, make sure to give it a resounding thumbs up. However, Tesla's ambitions go far beyond just electric vehicles. The company is also making significant investments in renewable energy and has opened a new factory in Shanghai dedicated to producing Megapacks. The company is fully committed to revolutionizing the automotive industry. Tesla has a bright future ahead of it as it enters the energy storage industries. We'll examine Tesla's bold plans in this fascinating article. Examine the benefits of its recently established facility in China and see how the company maintains a competitive edge. Tesla wants to produce 20 million units by 2020, and they have high goals in mind. This would give them a commanding 24% of the market and establish them as the first automaker to accomplish this bold goal. Tesla has carefully laid out a roadmap that involves lowering general assembly and powertrain battery costs in order to minimize costs by 50%. Their goal is to gain a 50% market share by breaking into the mass market. Furthermore, Tesla intends to open a new production facility in Nuevo Leon, Mexico. By choosing this specific site, Tesla stands to gain a great deal of competitive advantages. Benefiting from reduced labor expenses and having access to a trained labor pool is one important advantage. The presence of proficient laborers guarantees Tesla's ability to sustain the superior caliber of its output, and decreased labor expenses augment the economic viability of the company. An additional benefit arises from the selected location's closeness to important trade routes. Tesla's logistical efficiency is improved by this tactical placement, which makes it possible for their cars to be transported and distributed more easily. The efficient supply chain not only produces cars in Mexico, but also reduces delays and guarantees on-time delivery to clients. Tesla is eligible to get the $7,500 tax credit that U.S. consumers who purchase electric vehicles can take advantage of. Customers are incentivized to purchase a Tesla since they can continue to be eligible for this tax benefit as long as they continue to have manufacturing activities in Mexico. Tesla is able to pass the savings forward to their customers, increasing the appeal and affordability of their electric cars by exporting automobiles from their new Mexican plant. Operating in Mexico also gives an advantage due to the nation's several tariff arrangements with other Latin American countries. These treaties, which lead to lower tariffs or even duty-free trade, are advantageous for Tesla. Tesla is therefore able to provide their goods to clients in nations like Brazil and other Latin American markets at a pricing that is more competitive. All things considered, expanding their client base in the market and building a new production facility in Mexico seem like a wise move for Tesla. They're setting themselves up for long-term development and success by leveraging cost reductions and broadening their reach. So many investors with a bullish view of the company's future and high expectations for its performance. They demonstrated the depth of their management at Tesla's most recent Investor Day. Talent gave many stakeholders peace of mind. It's important to remember that Tesla is not entirely dependent on Elon Musk for direction. This year is the much-awaited arrival of the Cybertruck, which has already received an astounding 1.3 million orders. It is anticipated to have a huge impact. A value of about 40 cents per share would arise if Tesla is able to introduce the Cybertruck this year and ship 200 units the next year. Additionally, Tesla's energy division, which generates $801 million in income from energy generating and storage, is another growth engine. Certain analysts have an exceptionally positive perspective regarding this industry. An important projection from Tesla investor Gary Black is that by 2023, Tesla Energy may bring in about $20 billion in sales and $8 billion in gross profit. According to a new analysis by Canaccord Annuity, milestone investors should keep a close eye on the enormous prospects that Tesla has ahead of it as it continues to pave the road towards a sustainable future. Tesla was praised for being a sustainable behemoth, is commended for its outstanding accomplishments in the fields of solar and energy storage systems, particularly Tesla which has made a name for itself as a major player in the clean energy and electric vehicle industries. Yeah, the strong financial sheet and positive prospects for Tesla in the upcoming months were highlighted in the report. The business is capable of navigating any future downturns in the economy. Tesla's solid financial standing establishes it as a dependable and safe investment choice. Enhancing investor trust in the long-term prospects of the business, acknowledging the growing significance of renewable energy. Offering a wide variety of solar and energy storage devices is Tesla's main goal. As part of its strategic expansion ambitions, they are dedicated to offering clean energy solutions that meet a range of consumer needs. Tesla recently declared that it would build a factory in Shanghai that would be used just to produce its groundbreaking Megapack batteries. With plans to begin ground in the third quarter of this year and start production in the second quarter of 2024. This move is a major step towards increasing its footprint in the booming Chinese market. Tesla wants to produce an astounding 10,000 megapacks a year and ship them all over the world. This choice emphasizes the strategic significance of China and the worldwide expansion plan of Tesla. As of right now, China is Tesla's second biggest market, contributing over 25% of the company's revenue in 2022. The new factory will allow Tesla to bolster its position in China even more. Tesla is making the most of the enormous market potential in order to maintain its leading position in the area. With this growth, Tesla will be able to meet the increasing demand in China for clean energy and electric vehicles, which is in line with the country's efforts to promote sustainability and environmental awareness. Tesla may be the first foreign automaker with a fully owned facility in China. Thus, its choice to open a gigafactory in Shanghai back in 2019 was revolutionary. Since then, the business has successfully benefited from China's strong demand for electric cars as well as the nation's dedication to lowering carbon emissions. The production of Model 3 and Model I automobiles is mostly done in the Shanghai plant, which has been crucial to Tesla's growth in China. Apart from meeting the domestic market needs, the plant has grown into a major vehicle exporter. But more than 30,000 Model US were sent from the Shanghai facility to Europe in 2020 alone, supporting Tesla's overall sales results. Due to the frequent power outages in 2021, China has experienced a sudden spike in demand for grid storage batteries, which has created new opportunities for Tesla's energy storage solutions. Nowadays, a lot of provinces mandate that newly constructed wind and solar farms have enough batteries to store a portion of the energy required to create. This rising trend represents a significant opportunity for Tesla to expand its foothold in the energy storage market, further strengthening its position as a leader in renewable energy and battery storage solutions. For those unaware of the magnitude of this development for Tesla, it's advisable to keep a close watch in the upcoming months. The future appears exceedingly bright for the company's expansion into renewable energy and battery storage markets, with tremendous potential for future growth and innovation in the horizon. This demand is primarily fueled by the installation of electricity storage systems, and China happens to dominate the production of rechargeable batteries and the necessary chemical processes for their creation. But let's focus on Tesla's new factory in Shanghai, where they will be manufacturing Megapacks that can store enough energy to power 3,600 homes. For an entire hour, these batteries are not only cost-effective, but also perfect for utility-scale power storage, making them an ideal solution for saving wind and solar energy for future use. Now, why did Tesla choose Shanghai as the location for their new factory? Well, there are several reasons. China is a great place to increase output and cut costs because of its dominating battery supply chain. Furthermore, growing political hostilities between China and the United States, a lot of American business owners are reluctant to use China's battery supply chain as leverage for their investments in the nation. With its new plant, Tesla will be able to service the growing demand for energy storage around the world, despite strong competition from regional titans like NEO and Warren Buffett. Both the Biden administration and the Chinese government have been actively encouraging corporations to invest in developing technology in the United States, recognizing their relevance. President Biden signed the Inflation Reduction Act into law, which offers incentives for the development of rechargeable batteries to keep up with the growing demand for electric vehicles. Tesla's aggressive goal of selling 20 million cars annually by the end of the decade will require a significant increase in the supply of batteries. Nevertheless, cost controls must be put in place throughout the whole supply chain, especially for batteries, in order to achieve truly affordable electric automobiles. The CEO of Benchmark Mineral Intelligence, Simon Moss, thinks Tesla has an easy route to growth if Musk can lower the cost of batteries. But Tesla is up against ferocious opponents that are desperate to take market share. It may be a major setback for Tesla if the business is unable to lower battery costs. This concludes the video. Enjoy and spread the word. And don't forget to watch our upcoming film on your screen if you want to be current on Tesla's most recent initiatives. Thank you. I'll see you there.